All right. In today's video, we're breaking down some takes from Arthur Hayes on basically what's happening and where the money printing will come from, but also some generational conflict and issues in the housing market in the US. So stay tuned. Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So in today's video, like I mentioned, it's going to be some clips from Arthur Hayes on a recent podcast slash interview he was doing. And one of these topics he talked about really hit home for me because I've actually been looking at this from my personal perspective with what my parents are going through right now. So let's play this first clip and then I'll give you some of my two Satoshis along the way. And then, of course, you guys leave your comments.
It's going to be interesting to see how regulations pay out for crypto, right? Because, or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things that boomers own and went down and they can't afford their retirement? So they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
What would you guess?
I think there's going to be a lot of intergenerational conflict. I don't know the outcome of it.
What?
But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem. The crypto.
That's exactly what I'm actually talking to my mom about right now. The house that I visit and that she's still in is the one that I grew up in for high school. So this is, 20 plus years. And of course, it's increased in value as most property does in the United States, depending on the location. But we know that that's actually just debasing of the currency, which is why the property goes up. And I was looking at this from my perspective, like, yeah, well, I don't even want a home in the US. I had a home in South Carolina. I sold it. So, and my sister lives in another state. So it's like, yeah, I don't want it. She's, retired. And then I go home and have to make some repairs and changes like that. So it's becoming difficult for her to take care of by herself. And it's too big, 2-story, 4 bedrooms. So it's like, yeah, what do you do with that as you age? And ideally, like he just mentioned, Arthur Hayes, is like, yeah, they're going to want to sell their assets. But it's like, well, I know from my perspective, it's like, well, I don't want that house. And I even mentioned, I was like, yeah, what I would do is sell the house, take the Bitcoin, sell the house and buy Bitcoin with it. But that's not for her. Clearly, she's not in that realm and still need a place to, stay. So it's like, moving to a service condo or something like that. And that made me look at some of this information, did a Grok search on housing in the US and the affordability. And you have here, boomers had interest rates up to 17% in the 80s, but lower home prices relative to income. So average home was about 185,000. Boomers paid 3 times their annual salary, and home ownership rate at the age of 25 in 1991. You go to Generation X, they're paying 7x their salary. 25% were underwater during the crash. That was when we had the big crash in 2008. That's when Bitcoin came on the scene. 14 trillion in real estate. Generation X owns 14 trillion in real estate. I don't know how much the boomers own. Then you look at Gen Z. It's taking about, the interest rates were a lot cheaper, but still looking at about 6% of their, six times their salary. So a little better than Gen X due to the cheaper interest rates, and they own 27%. So you got Generation X, Generation Z owning 50 some odd percent. And then Alpha's not there yet, but they're projecting that the cost will be much, 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 much higher. So, but I know some in between this Gen Z and X, don't even want to, these are the ones that you see on YouTube and TikTok that are living abroad. And a lot of the new generation, becoming influencers, things of that nature. So they're not putting a lot of this capital back into the US. So it's like, yeah, well, where is that going to go? Median home, 370,000. And I think now it's around 400 to 500K. It's already 400 there. So that's crazy. like when you put that in perspective and then try to like go down the rabbit hole thought process of like, what does that mean? And like Arthur mentioned, it's like, well, the government has to step in to save the market like it did in 2008. If you have a bunch of boomers retiring, it's like, yeah, you can't just throw them out and say, sink or swim, good luck.
What?
But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
That's the solution of everything.
Does money printing lead to more degen activity usually?
Yes, because again, if you don't have a lot of financial assets and you're watching all this inflation happen all around you, you have to use more leverage and the little bit of savings you have to. I think it'll be rolled in slowly over time, and so you're not going to see this knee-jerk reaction. I think the Trump administration learned that these sorts of massive sort of changes are going to create outcomes that they don't like, which is heightened bond market volatility, things going the wrong way. And so if capital controls are going to be phased in over time, they know that they need to replace that buying. Either it's the Fed, it's the Treasury, it's the banking system, it's some other private sector actor that is allowed to create credit very cheaply and therefore replace these foreigners who will be forced to sell these assets.
Stocks have recourse.
That's exactly what I've covered in a couple of other clips. And then you have this post here talking about Fannie Mae, powerful Fannie Mae policy change to unlock Bitcoin-based mortgages. So this is already with them using Bitcoin as a mortgage. So like you can use Bitcoin to buy a house. So that's trying to trigger the Gen Zs and Alphas is like, hey, you know, look, we support you. Let's stay here. But plus, remember the SLR, the leverage ratio. They are going to be looking at these entities to be able to essentially lever up and buy treasuries. So there are little subtle changes going on behind the scenes. And at the end of the day, all it really means is the money printer's back on, but it's not in the form of what we would expect in regards to the Fed dropping interest rates. But make no mistake, there are moves being made behind the scenes. And it's because the entire system is on a house of cards. They have no choice but to step in and do something with all this.
Good.
I don't think it's politically palatable to buy Bitcoin and print money. I think if you're going to print money, okay, either it's tax cuts or it's build a bridge or build a hospital, these sort of things that benefit more people than just a small sector of people who own Bitcoin. I mean, anything is possible, but I just think it's bad politics. I think if you create all this money and you could spend it on anything you want, surely spending it on buying Bitcoin is probably not going to be the best way to get votes. Well, I think obviously it's probably less essential.
So that was in reference, they asked him a question about, do you think the government will actually buy Bitcoin? You guys remember the Cynthia Loomis pitched the goal to buy 1 million Bitcoin and gave this budget neutral strategy. And we haven't really heard much about that. And just the way Arthur phrases is like, yeah, that kind of makes sense that the government wouldn't do that because you are only targeting a small portion of the population. Yes, the Bitcoiners are large and enough to make noise, but there's the bulk of the population doesn't interact, doesn't even know what Bitcoin is, not familiar with it, any of that stuff. So if you're going to be injecting capital and you're coming up on the midterms next year, it's like, yeah, you better find the way to get the most votes. So there could still be maybe some small amount, but I would imagine it goes into other things that move the needle for, you know, getting votes. So it's not to say it's off the table, but at the end of the day, still, like I mentioned before, it's just money printed over. There's going to be money coming into the system in different places and different ways, and all of that will still find its way, not all of it, but it will still find its way into Bitcoin because people are realizing that is the only way to store wealth in the long term. All right, that's all I got for this one. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.